Laolu Akindele. He's a technology consulting partner with PwC. Great to have you on the show with us, sir. Now, certainly, while the survey revealed that banks do believe that digital adoption is no longer a future strategy or future plan, you also say that they're digitizing with discipline, not disruption. Digitizing with discipline, not disruption. What exactly does that mean?
Yeah, so good evening, Uche. It's a pleasure speaking to you today. When we say digitizing with discipline and not disruption, what we are saying is they are not fully overhauling the core platforms. So what we are saying is gradual modernization. So they're modernizing, but they're avoiding breaking what is working currently. And it's taking the form of integrating digital tools into the systems and processes that currently work. We're also seeing them improving their customer journeys and experience rather than changing their business models. So, for example, some of the things you'll see would be them improving their customer front end points, like their channels, like their customer interaction interfaces. So what we are saying is more of an evolution rather than a revolution. Most changes that we're seeing are related to upgrades of the core platforms or probably them doing add-ons on the core platforms. And the reason for this is they're trying to balance innovation with regulatory pressure. The banks that have concerns around operational instability. So rather than overhaul the core, they would rather upgrade in phases. We've seen an example of a revolution in Nigeria where a bank decided to sort of move to a service-oriented architecture where they changed the entire core. And that has helped them in terms of customer experience, customer service, the ease of rolling out products into the market, as well as taking advantage of newer technologies. But what we are seeing in East Africa is just banks adopting a gradual approach to this.
Right. And as you mentioned there, before we get to regulation, is that there's a visible gap between front-end innovation and what you call back-end modernization. In fact, you found that only 2% are prioritizing retiring their legacy systems. But I'm curious, is this because there's currently no market pressure to make those significant changes to the back end? How significant of a risk is this for commercial banks' long-term strategy?
Well, so that's a good question. I would say it's a big risk. There's pressure on them to actually replace the core. And that's because they're seeing a lot of competition, as you rightly mentioned, from fintechs, and some of them are losing market share. The customer of today is a different customer. That's a customer that's their demands, their needs, their preferences are changing rapidly. But some of the challenges we see with banks adopting this full digitization is sometimes it's difficult to get approval for such significant projects. Also, the cost of replacing the systems is quite significant. So you find banks trading the line between balancing the margins, managing stakeholders, managing shareholders. There's also the risks with introducing a new platform that they have to deal with. But you've rightly mentioned it's a risk because when you don't replace your core, modernize your core, you then have challenges in terms of being able to effectively serve your customers. You'll struggle to take advantage of some of the newer technologies that we have out there. Legacy systems are actually prone to vulnerabilities. So you could also be prone to cyber attacks. And your competitors will always take advantage of that and they will take some of your customers. So what we're advising banks to do, even if they cannot fully change the core, is to sort of walk a journey, and it's a roadmap where you then identify what your critical processes are as well as your high-risk components and start with those if you're unable to actually do the full change at once.
Mm. And I think a question is, do they have the time? Because one struggles to understand how their back-end models will remain relevant and are existing in this current environment where things are changing quite fast. So are they prioritizing other areas such as the adoption of artificial intelligence? Because that's moving very fast and it's changing the landscape of various industries very fast. Also, are they adopting cloud services? How are they adapting to that? And certainly going forward, you sort of touched on this, what role will partnerships and collaborations play in improving the adoption in these areas?
Yeah, thanks. So that's a great question. So when you think about AI and cloud, let me start with artificial intelligence. So when it comes up, there's a lot of excitement, there's a lot of curiosity, but then at the same time, there's also anxiety because a lot of people are still not comfortable with it. So there's a lot of awareness, but then there are fears when it comes to artificial intelligence. So you're thinking trust, you're thinking cybersecurity, you're thinking data challenges, you're also thinking even the resources. So there's a lot of awareness there. A lot of people are upskilling. They're using it to do some of the basic tasks. But one of the big challenges we've seen is just data gap. So if you're still on legacy systems, you could have issues even in terms of integrating your systems, or you could even have issues pulling data from your system. And we know that you cannot have AI that is relevant without data. So that's an area where we're starting to see a bit of progress. They're focusing more on the data governance, the data strategies, getting the data right from a data quality as well as a data warehousing perspective so that they can take advantage of AI. I think when you think about cloud, the cloud journey started a while back. We've seen people actually move some of their workloads to cloud, and some of them have moved them back. And that's because they've had some challenges, especially from a cost perspective. And when you trace it back to the root cause, you'd actually see that some of the issues are related to having a proper cloud strategy, or even doing proper optimization for the cloud. But when you look at AI and you think cloud, one of the benefits of cloud is it allows banks roll out AI services. So we're starting to see some of them move back to cloud, but doing it properly. I think when you talk about partnership, you really cannot advance without partners. So there's quite a lot of partnership with fintechs, with insurtechs to help push the AI adoption. So an example of this is you're saying fintechs or even other consulting firms come up with relevant AI models, which the banks can then integrate with. You're seeing partnerships from big tech players that are spending time and investing in actually training banks on how to adopt AI, as well as helping them scale up and also helping them with knowledge transfer. You're also seeing partnerships with big tech from a cloud transformation perspective. So we're seeing consulting firms come up with managed services, as well as helping banks with optimization of their cloud investments.
Right. And before we let you go, we have to touch on regulation, which you mentioned. Has that been a blessing or curse for the commercial banking sector? Because we know the space has started to see stronger regulation, closer monitoring from governments, more legislation around digital instruments. How are banks not just adapting to this, but also impacted by these changes?
Yeah, so we're seeing a lot of regulation, and top of mind, you're seeing climate-related financial disclosures, you're seeing cyber resilience, seeing regulation around data protection across the region, as well as from an ESG perspective. And some of the things we're seeing them do is then to enhance governance, to avoid what we call greenwashing. We're also seeing them implementing ESG systems. We're seeing a lot of strengthening of their internal and regulatory controls. And some of them are also leveraging partnerships to innovate in a safe manner. But then when you look at the impacts, there's obviously a cost impact because with implementation of systems, as well as onboarding of resources, then there's a cost that is attached to that. We're seeing a bit of a cautious approach to rollout of digital products because it then has to go through several approval layers as well as the governance processes to ensure that they're complying with the regulations. And lastly, I think for the customers, it's good because we have more stable systems, and every customer wants to bank with a bank that has a stable platform. Yeah.
All right.